You talked about two important distinctions there, investing in the equity, so the shares of a company, and then investing in the bonds of a company, so loans to a company. So with the equity, you've got more opportunity to influence what they're doing. So I guess that's turning up to AGMs, voting. Perhaps we can come back to that in a little bit in terms of what you guys are doing to be active in that space. But because you mentioned bonds, just looking at that, equities, so shares in a company, are a little bit easier for the average person to understand because most of us see the stock market, the movement of the stock market on the news. It's the thing that makes the headlines, right? If it crashes rather than rockets in value. But owning a stake in a company is an easy to understand concept. Bonds, I think, typically are less well understood by most investors. So what would be interesting is not the technicalities of what a bond is, but what are bonds for you as ethical investors, and what's the difference between the things we hear out there around green bonds or blue bonds? Can you just unpack some of that for us?
For sure. I mean, I actually think that bonds are one of the most underappreciated tools in the sustainable investors and impact investors toolbox. What they allow you to do, it's essentially any entity, a government, a municipal or corporate, can go out to the market and raise capital, borrow capital from the market. Some people might choose to give them that, and some people might choose not to. If they do, they can be raised and packaged up in a form of a bond. Green bonds, blue bonds, social bonds have conditions attached to that package. So when you're willingly giving your capital away, you can be sure that that capital will be used for a specified project. If it's a green bond, it can be a specified renewable energy plant that's being built, energy efficiency infrastructure that is implemented in buildings of that company or that municipality, water infrastructure that is being substantiated. Social bonds could be things like investing in new social housing projects from housing associations around the UK, or investing in school infrastructure, or new GP surgeries even. And so as sustainable investors, we can kind of trace, in a way, the client's capital all the way through to the end result. And by the nature of these bonds, they need to report quite transparently on this. So sometimes we even know exactly how many social housing units have been provided by a social bond. So it's a really nice kind of greenwash preventative way of investing in sustainable things.
Yeah, so it's interesting. So bonds, by the sounds of it, can be more specific in your space. Whereas if you're investing in the equity, the ownership of a company, then that's you just have to take every action the company takes, right? The good behaviors and the bad behaviors with it. So absolutely makes sense.